This morning, the Nifty is opened a little higher than where it closed yesterday. Now, unless it breaks the lows of 11,250 and continues lower, day before when I posted this chart, I also mentioned that we can't be sure as to whether wave 2 is over or not. The sell-off did look pretty steep. In fact, the Sensex has actually broken this low. But this fall so far still appears like a three-wave pattern, which means if it goes above this swing low, which is 11,335, then it most probably is just three waves. And till we really see a clear extension, that would be the consideration. Now, what does that mean? That means that we rallied in ABC, we fell in ABC, and that's after a five-wave decline. But it means that this corrective pattern in wave 2 is not complete, and what we might be forming is a more complex, larger A, B, and then another C. So, two ways to go about it. One is we can draw a parallel channel. Okay, and so that would give us an objective again of 11,555 odd, which is, if you remember, the 61% retracement mark. So which means we could actually come close to testing the 61% retracement mark or the 20 DMA a second time if we don't break these lows right away. Of course, it breaks and it extends, which is still an open possibility at this moment. Then the trend down just continues, but given that it didn't happen, it's possible that we should consider, after a lot of panic that we've seen in the last 2 days, that this is a possible alternate that we are doing. Wave A, B, and C for wave 2 before we can start wave 3 down. Now, there may be some variations for even Bank Nifty that I would have to consider because there are some legs that overlap. But this is purely looking at Nifty and Sensex. This possibility is still open. Now, also what we've noted is volatility, which is the India VIX was down yesterday. In fact, it was flat. It did not really jump with this sell-off in the market, which shows that there was no fear into this sell-off. Another reason to consider that this is just B and not the start of a third, else the fear index should have jumped. It's also down around 2% today morning. Then I've also posted separately the chart of the Shanghai index, which I'll just show here, which has developed a ending pattern, and we've today in the live market this morning broken out of this ending diagonal. So a lot of the fear that was around Asia and China has gone on a back burner because the sell-off occurred ahead of these announcements, in expectation of the announcements, and so it's pretty much discounted. And so that fear trade from trade is over. And whatever has to happen has to be India-centric only. So it will have to be purely based on any Indian development or news or trends. And the third part, and this is more interesting and was highlighted to me by a friend, is that we've seen this entire fall from the start of this month occur in a very specific pattern, which is the market sells off in the early part of the week and then rebounds in the second half of the week. And this happened in wave 1, it happened in wave 3. You notice this opening higher and sell off throughout this day occurred on the Monday. This fourth wave, Monday it opened down and sold off, and then you saw that this week itself we closed on the 14th Friday right up, and next day we gapped down and sold off from there. So we are now into the second week, and then there's this holiday tomorrow, and these holiday, they were just like there was a holiday last week, and prices rebounded into the weekend. So there's a chance that if we follow the same weekly cycle pattern that we followed for most of September, then too we would be looking at a rebound into Friday before we start wave C down. So this is the structure. It's still a five-wave fall. The only difference is that instead of considering the third having started, we might be doing A, B, and C, possibly go and retest 11,550, and that would then set it up better for wave 3 down to start.